Hey guys, welcome to TwenArci Education. I've just gotten tapped into this trade and I wanted to do this video to explain the W pattern using a live setup. Um, I like trading chart patterns because they are repeatable. Um, I'm more of like a data guy. I like to know maybe how much, maybe in terms of, let's say, this pattern, how many times does it win on average? Maybe what's the expectancy in terms of maybe risk reward ratio. And the thing about chart patterns is you can, let's say you've taken maybe 200 trades and you put that data in an Excel sheet, you can be able to calculate and come up with those numbers. So anyway, let's get into it. I'll show you what the pattern looks like. I'll show you my entry model. I'll also talk about what a high probability setup looks like. Though I'll be a bit brief, but I hope you get the idea. Okay, so let's start with what the pattern looks like on the chart. So the pattern looks something like this, which is basically price creating some sort of a double bottom with some sort of resistance or what you'd call a neckline, and then breaking that neckline. That's why it's called a W pattern. It basically looks like a W. So you need to identify such a pattern, but you just don't take the trade anywhere. Maybe for high probability setup, I like to take it maybe at a support area, maybe price tapped into a bullish fair value gap, maybe on the higher time frame. Like I took a setup on gold this week, earlier this week, when price tapped into a daily fair value gap and we saw a similar pattern. Very good setup. So basically that's why it's called the W pattern. You see, it looks just like a W, looks something like that. And so ideally what you want to do is wait for price to come back to this zone with some sort of like a retest, and then you take your buy trade. But after trading the pattern for some time, I have come up with my own ways of entering, and that's what I mostly wanted to talk about. So we can see the pattern formed and price left a fair value gap area just below this neckline. And so what I do, I place my buy limit order at the fair value gap, at the midpoint of the fair value gap. You would say, yeah, the midpoint maybe, yeah. But sometimes I do a bit higher, maybe to account for spreads. I'm currently not using a zero spread account, so yeah. Sometimes I've had situations where I've tried to be too precise with my entry and end up like missing the entry itself, which is sad. So for your stop loss, you would want to put your stop maybe somewhere below here. But then now considering that I use the fair value gap as my entry, I don't expect price to break this. And so to have an even smaller stop loss, I like to use the fair value gap as my entry. So that's like one of the advantages of using like a fair value gap for your entry. Um, you know, over maybe using the neckline. The neckline is ideal because most of the time you'll be tapped in, but then the problem is you'll realize that you'll need to have like a bigger stop loss. And for me that difference is a big one because what what that means is if I have to enter at the neckline, then I'll have to reduce my lot size, to account for a big stop loss, and maybe my win rate won't be that good. It's not the same as this. It's not the same as just that stop loss. Here I can use a bit of maybe a higher lot size, relative to the account, compared to if I entered at the neckline. So you get the idea on that. But the problem with this is sometimes you might miss that trade. So for this, currently I'm targeting a 1:3, um, somewhere above here. There's a fair value gap area there. I'm targeting around that zone. You can do a 1:2. The thing is, whether you do a 1:2, whether you do a 1:3, if you can use this pattern consistently, applying all its rules, identifying the high probability setups. Not all W patterns are good setups, but if you can do these, identifying, the high probability setups, maybe doing a 1:2 or 1:3, in the long run, you'll be making money. So let's see how this one plays out. I'll update you guys. See you then. So price has really given us like a really good reaction from the zone. And in terms of like managing this trade now, what you'd want to do is Maybe on the I prefer like maybe the 1 hour time frame. Maybe wait for a candle to close above this zone, or you could still use the 30 minutes, whatever works for you, and then you could move a stop loss to break even just as a way to mitigate risk. I really don't expect price to come all the way back to our entry after closing above maybe that zone on the 1 hour time frame and still have this as a valid setup. I honestly would not expect that. So my final thoughts on these would be the entry was like really perfect. The exit too was perfect. We didn't suffer so much drawdown, and the setup has just played out nicely. So see you on the next one. Follow for more setups and educational content.